All right. So I have a rule-based system. At the end of the call, I'll email you the PDF
Hmm.
to the
Hmm.
actual rule-based system, but I'll
Hmm.
go through every component of it first. So it's pretty simple, pretty simplified. So the daily bias is based on the bias is based on the daily. I already say daily bias.
Hmm.
The time period that we trading from is between 7 a.m. and 10 a.m. Eastern Standard Time.
Okay.
Yeah. So that's the time for this one. It have another setup that's 8:30 to 11. So I'll show you that one as well. But the most consistent one I have, the most rule-based one I have is 7 to 10 a.m. New York
7 to
time.
10. Okay.
Yeah. And the trading days are Tuesday to Thursday. Monday is a
Hmm.
possible day, but because you're now starting off, Monday is probably not the best day to start trading because Monday kind of choppy sometimes. So you might
Sure.
get some moves Monday, but highest probabilities, just statistically speaking, Tuesday to Thursday is the best. Tuesday, Wednesday, if you want to be super high probability.
All right.
Um, so I'll just go through the first. Okay, and then the entry rules. The entry rules are you confirm your bias based on the London session. Then the second option is you find an each one order block, and I'll show you what order blocks are.
True.
And then the entry is based on 5 minute liquidity. And funnily enough, there's a move that happened today, and you'll see how algorithmic is an algorithm we're trading against. So you'll see how
Okay.
algorithmic prices move, right? So let me start with the first component, which is daily bias. So daily bias is essentially based on whether the algorithm is taking out daily highs or lows. So let's use this week as an example. So I'll go through the rule-based system in a real-life example that happened this week. So you'd have a better understanding of it. You see it actually legit.
Hmm.
So Monday, right? So let's assume we allowed Monday to trade by. So Monday's candle is painted, right? On the daily time frame, if you look at these candles here, you could take this in notes too. You usually tend to look
Yeah.
back 10 to 15 days, but it's recorded, so you'll have it anyway.
True.
But you look back 10 to 15 days for the most time. Though that's the data point, the data set that the algorithm tends to use, generally speaking. But right? But you could go further back in time. So you label the highs, you see price is simply going for liquidity above daily highs. So you have some days where lows are being taken out, but when lows are being taken out, it's because they're going there to do other things. They're going to fill gaps in price. You can see right here, price broke this low, but it filled this gap and it
Right.
continued to the upside. So just added that nuance to it because it's not as down and dirty as highs being taken out, so we buy, and lows being taken out, so we sell it.
Right.
It have to have an overall context in the market.
It has to have a reason. Yeah.
Correct. Yeah. So daily highs being taken out. So from a purely rule-based system standpoint, on the daily, we have bullish bias, right? So that's step one of the system. You have your bias. So you know this week, all you're looking for is buys. You show up to the chart Tuesday, Wednesday, Thursday, and until price hits a weekly level, you're looking for buys. But we'll get into weekly levels and I'll explain why I didn't trade today also, because price did hit a weekly level.
Okay.
But let's assume we're not looking at the weekly. Let's assume you're not at the point where you're able to go to the weekly and discern possible reversal points. And you're purely looking at the market from the standpoint of my system tells me the daily bias is bullish. And I'm going to follow that daily rule base. I'm going to follow that rule based system coupled with risk to reward, coupled with risk to reward and risk management. Every trade that I take, I win two. Every trade that I lose one.
Minus one, right?
So even if I am wrong 2 times, if I take 3 trades, Tuesday, Wednesday, Thursday, I'm wrong twice and I win once, I mean, I could still be flat.
Yeah, it's the profit.
Or you
It's still
win one,
profit.
you lose one, you're still green.
Yeah. Mm-hmm.
So all that ties into the rule-based system.
The system.
Yeah,
Nice. That
it's
makes
a
sense.
system. Just follow it, the algorithm.
Mm-hmm.
So your daily is bullish. Once your daily is confirmed bullish, the next thing you're looking for when you show up to the charts is a confirmation from London. So if we bullish, we expect London to make the low of the day and for New York to be a continuation of London. In a nutshell. If London bullish, New York bullish.
York bullish. Okay.
Period. Right? So that's why this system is probably the easiest one because you actually have confirmation of bias. Because realistically, the hardest thing in this game is bias. Because you could flip a coin, buy or sell with a 2-to-1 risk reward model. You could still come out profitable over the course of 100 trades. You lose 50, you win 50, you're green. Because every time you win, you win 2. Every time you lose 1. So you get a confirmation from London. Let me go to the real example. I just write out all the rules and then we just go through it one by one.
Yes,
just typing it out one by one, kind of tedious.
I'll watch it back after.
Perfect. Right. I like to go straight to the hourly chart, mainly because if I'm bullish on the daily, if the forward chart is bearish, that's irrelevant in the face of the daily time frame. And the hourly somewhat, what's going on? All right. See my screen, right? Seeing the charts.
Mm-hmm.
Right.
Mm-hmm.
So this is how I look at price. I put a vertical line at midnight New York that delineates the start of the new day, right? London made the low of the day. So this is the low of the day here. When you show up to the charts, you show up to the chart 5 to 6, 6 to 7, right? You show up to the charts at 7 o'clock. So you would be seeing the 6 a.m. candle, which closes at 7.
That.
Correct, right? This is what we show up to the charts and we're seeing. Mm-hmm. We're looking at price through an algorithmic standpoint. The daily is bullish, so we're looking for buys, right?
Mm-hmm.
London confirmed the low of the day, so our bias is now confirmed, right? So daily, I just type this.
Yeah, you have it.
All right. So the daily is bullish. Check. We're looking for buys. We're looking for London to confirm that bias. Check. London is bullish. We're looking for an H1 order block. So an order block is essentially the last opposing candle before an expansive move. So if we bullish, is the last down candle before a move up.
Before
if we bearish, okay, is the last
up candle before I move down.
Correct.
Makes sense.
So out of this price action here, where is the order block? You have candle 1, candle 2, candle 3, candle 4, candle 5, candle 6.
Right, so it'll be candle 5.
Candle 5, correct. So you label it H1 order block. Step 2, check. Then you go down to the 5 minutes. Because it's rules you're following. You're not trading.
Yeah.
You're not trading. You're following a rule-based system. Correct. And then you look for liquidity. So liquidity, think of liquidity as you're playing against dumb money. As harsh as it sounds, you're playing against dumb money. In order for you to buy at a good price, somebody have to sell at a bad price.
Sell at a bad price,
right? So in this price action here, so what we've done is we've reduced all the variables to a point where the statistical edge is so high in our favor that there's a more than 50% chance that we right. So you're guaranteed profitability based on the 2-to-1 risk reward ratio.
Mm-hmm.
Because once you have more than 50%, you will be profitable. You could be at 50% win rate with 2 to 1, and you'll be profitable. And that's flipping a coin. So imagine now when you put things in your favor, you just is more like, think of it as you're not doing everything right, you're reducing the amount
You're
of things
reducing
that
the
can make you
odds.
wrong.
Yeah, you're reducing the odds of something going wrong.
Right.
Right.
So within this order block here, this area that I shade here, you find a low. The reason you find this low, and I don't know how much knowledge you have in trading, but because I used to trade a while before, the average books is tell you, put your stop loss below lows if you're buying. So you had an expansive price move. Think about the psychology of the average person who's trading, right? Look at this price chart here. When price made this big move up and people are emotional and they buy, let's say they buy here, or let's say they buy here. Because people don't buy when it's selling. People usually don't buy when it's going down. They buy when it's starting to move up because they need confirmation. We buy when it's going down. Because the best time to buy is when it's falling, the best time to sell is when it's rising. Just in terms of getting the best entry, right? Getting the best entry point. But back to liquidity. This big price move up make people buy price. When people buy price, this swing low here is where they place in their stop. See this swing low here? That's where somebody placed the stop loss. So somebody put a stop loss here. So let's say I trading against you, because that's what's going to happen. When you start trading, I'm going to be trading. Me and you fighting for the same thing, right? Same resources. I want that entry, the best entry possible. I want to win, right? You buy here. When you buy here and you put your stop loss here, your buy position, in order for you to exit that buy position, you have to sell. You have to do the opposite of what you do to exit the position, right? So in order for you to sell, somebody had to be buying. So we buying at other people's stop loss when they getting stopped out and selling.
Right.
So that's why you enter liquidity. So you have a low here, you label that low, and then what I like to do, you'll see it in the PDF, is that if you're buying below the low, you enter at a 0 level, a 20 level, a 50 level, or 80 level, a level that ending in those numbers. Reason being, it's because psychologically, when you put in your stop loss, you're not going to put your stop loss at 1.0314. You're putting it at a 20 or a 50 or a 30 or a 80. You're putting it at a round number. You're slaughtering pigs, bro. Like, people who not smart, you're beating them. That's how you just make your money. Right? That's really what it is. So you put your entry below this low, round it to a key level, which is a 50 level. That's where you put your stop loss. And then you place your stop loss right below. Don't put your stop loss based on market structure. Put your stop loss at 15 pips. 15 pips. So you enter below this low. Now it have more variables in here. If you want, there's a gap in here. I could show you a gap in here that price has to fill. There's a little gap in there price has to fill. But let's stick to the basics of liquidity. All right? You have the liquidity there. You're entering at that liquidity run. So you set your limit order. And again, remember what I was explaining to you? Right, so this is time. This is now 7 a.m. Right? Remember what I was explaining to you of? Your orders, it have to have somebody on the other side of all your orders. In order for this to work, somebody have to be on the other side. Your buy had to be somebody sell, your sell had to be somebody buy, vice versa. Correct? So added confluence of exiting your position. So when you buy here and you want to exit your position, you have to sell somewhere, right? Look right here. This move that coming down here, people sold in that move. The same way people buy up here, people sold coming down here.
So in that move, yeah.
And where their stop loss going to be? Above here.
Well, fair.
Exactly. And look at how it make us swing high. Yeah, I don't know if you ever heard of double tops and double bottoms, but
No.
when you first start trading, that's something that it is teach you because all the information is give you is to make you the 90% that gonna get slaughtered. So people, when I see things like this, it's like, all right, yeah, people put a stop loss here because the average person thinking, this is where I need to put my stop loss. Back to the rule-based system. London confirmed the low. We have a H1 order block. We look for 5-minute liquidity within the order block. So once you find the order block, your work really becomes pretty simple. We could even go down to the 1 minute and we could see how clear the low is. And people put a stop loss below that low. I like to have a 10 pip stop because I just like to have a 10 pip stop and look for 20 pips. So what you doing is, bro, once you find the low and the key level below the low, you just put your limit orders there. I could show you how to calculate your risk percentage, how to calculate how many lots to use, etc. That's secondary shit. And that's it, bro. That's the entire game. You wait for price to come down. Look at what happened here. This is perfect. So you see the entry point that we had labeled?
Yeah.
You notice it make a low right before that?
Right before that, yeah.
Exactly. It's generating orders. And this is where your psychology and your mindset and whoever is the most patient will always win. Whoever can control his mind the most, he will always win in everything, but more in trading. Because what happened here is it came down close to the price, but it didn't hit your exact price.
It. Exactly.
And if you don't have the discipline,
you're gonna move it.
You're fear. So you're either controlled by fear or greed. Your fear of losing the trade will make you buy here and put your stop loss here. And look what happened right after that. Bang.
The drop.
The run stops.
You're out.
Exactly.
You're
and
out.
That's when we buy. The patient men who following the rules, that's when we step in and say, all right, boom. You dig?
And it's a big
buy. And watch how it expands to the upside.
Candle.
Because we trading in line with the banks. This system is in line with the banks. It's so nuts, but you'll see the example today as well. Rule-based system. I will let you watch the rules on the screen and you decide where we're entering, where we're exiting. And you'll see how algorithmic prices, like to the second, the algorithm is moved to the second, dog. Like to the second, this algorithm is moved, right?
Mm-hmm.
So,
mind you, I might not get it right on the first go. Obviously,
you're going to get it wrong a lot of times.
Yeah,
you're going to get it wrong a lot of times, but that's irrelevant. We are basically a casino, bro. We are basically 100%. A casino. I don't care. Somebody could come in and win some money here. Somebody could come in and win some money there. But we have the edge set in our favor that as long as we have a big enough sample size for our edge to manifest itself, our account is going to be in net positive. Like, that's just what it is. We can go into risk reward and stuff like that because that's probably more important than even knowing how to trade. But yeah. So go up to the daily. No daily lows have been taken out, right? This is a low, no low taken out. This is a low, no low taken out, right? High is still being taken out. The algorithm is still bullish on the daily according to our rule-based system. Right. So the daily is bullish. That is all we need. Now we just need confirmation at London session. What is confirmation at London session? If we are bullish, we expect London to be bullish as well.
True.
Simple. Right? We label this opening price at midnight, which is 000. And London is bullish. London is bullish. 6 to 7. Excuse me. This is a candle you'll be showing up to the charts with. Right? Mm-hmm. So what do we look for? Where am I? Oh. I'm going to clean up these charts a little bit. so you can focus. My OCD just fuck with my bro.
I know I know what you mean though, trust.
Yeah, bro, my OCD just messing with me. Wow, 10 minutes this meeting gonna end. That's nuts to me, bro. So this is the perfect time for you to just jump in and do your thing. So the
Yeah,
daily is bullish. Did London confirm to be bullish? Yes or no?
correct.
Check.
Correct.
Check. Where's the H1 order block? It have it have candle 1, 2, 3, 4,
Right.
5, 6.
So number 5
Number
again.
5?
Correct.
This one or this one?
Nah, smaller.
Smaller? Why not
Yeah.
both?
True.
Yeah, it's
I
both.
said the
It's
first one
both.
indicates, yeah,
It's
the first
both.
one indicates that.
But the thing with it is, it's always better to choose the smaller one and the bigger one in terms of retracement.
Right.
But it's both because order blocks is essentially, remember I say smart money just buy when it's going down and dumb money just sell when it's going up.
Mhm.
So look at it theory wise. A down candle happen and then a big move up. Why is that? Because when a down candle happen, the banks came in and bought. So they move price up. And then when they come back down here, they're going to add to the position again. And we're going to
Mhm.
ride their coattail. So you label it H1 order block. Now we're down only 5 minutes. Where would a dumb person put their stop loss? Within this piece of price here, where does it look like a lot of lows are?
I would say 0.03700 around there. Yeah,
0.03700.
a little lower,
Okay, okay.
around there right there.
Right, that's the price we're using. 0.03700. And was our time? Was it
What
time
time
based on the
now?
rules?
It's the hour, no?
No. Was it time
No, no,
period?
no. Oh, we're only 5 minutes right now.
No. What is
Oh,
the cutoff time for trade entries? 7 to 10 a.m. 7 to 10
7 to
a.m.
10. Yeah, sure.
Right. So you went a little too low, which is fine.
Mhm.
You basically do what happened on the higher time frame, which is you went to the lower order block. But this is the higher one I would use.
Okay.
You see all these lows, you see low, low, low,
It
low.
just can't cut right. Okay.
Right. So I would have entered on the 50 level here.
Mhm.
Look at the time. Look at the time that price hit that level. 9:55 a.m.
Shit.
On the dot. 9:55 a.m. It hits that price. And what does it do?
Bounce.
It expands to the upside. And it's going to continue to it's still expanding. Like right now, you're seeing it expanding
Yeah.
to the upside.
It's expanded. Yeah.
So that is essentially the rule-based system, bro. We have about 6 minutes left on the call. So I know that was plenty within 40 minutes.
Yeah.
But I just wanted to understand, bro, that it's just an algorithm
And it makes
and your
sense.
brain.
Yeah, and it makes
It's
sense.
you fighting your brain.
Mhm.
Because the rules I give you, you can make any amount of money off of this. It's just your brain. It's just
Yourself.
it's
Yourself
yourself.
acting anyway.
The man in the, that's who you had to fight. That's who you're against. So yeah, bro, I'll send you this PDF. Obviously, you'll get this recording too. I'll send it in the group. I'll upload in all of them on YouTube, so you'll get
Sure.
access to the other ones I do. Um, but that's the system, bro. You can see this week it had two plays, two to one plays. Let's manage this trade in the last 6 minutes. The 50 level here. You say let's say you put your stop loss right below the swing low here. So a 10 pip stop. And you're looking for 20 pips. That's a 2 to 1.
Mm-hmm.
Let's assume you risk 1.5% on each trade. That's 3% on Tuesday, 3% on Wednesday. You know what it takes to make 100% a year?
Tell me.
6% monthly.
Shit, easy.
6% monthly to make 100% annually. We make 6% in 2 days.
Consistency really is key, man.
We make 6% in 2 days, risking 1.5%. We know